let us understand how to find out the present value of perpetual cash flows. In earlier sessions, we have seen how to find out the present value of single cash flow. We know how to find out the present value of annuity. But the thing is, the single cash flow is also related to a particular period, and annuity is for a given period, given set of period. But what is this perpetual? Perpetual means you don't have period. That's it. You are going to get it indefinitely. There is no time period. No time period. It means you are going to get this endlessly. Then in such case, how do you find out the present value? If it is 10 years cash flow, yes, we can find out using the formula, because our formula takes care of N, that is the time period. If it is 20, 30, fine. But what you will do with 100 years, 1000 years, infinite year? Okay. So how do you find out the present value of perpetual cash flows? That is our focus here. Let me give an example. Let's say you are going to receive 10,000 every year. You are going to receive 10,000 every year, and it is perpetual. So how do you find out the present value of this 10,000? Because you are going to receive this 10,000 this year, next year it goes for another 100 years, 1000 years. Then how do you know what is the present value of this 10,000? For that you need only one information, that is the discount rate. If you can know what is the discount rate, then finding the present value of this is very simple. Let me say discount rate is 10%. If discount rate is 10%, then for me finding the present value of this perpetual cash flow is not an issue. I can simply say present value of perpetual cash flow, in this case 10,000 is nothing but 10,000 divided by 10%, which is nothing but 100,000. As simple as that. That is, in case of perpetual cash flows, if you want to find out the present value, what you have to do is simply take your perpetual cash flow. This is your perpetual cash flow. Divide the perpetual cash flow by rate of interest. Okay. So perpetual cash flow divided by rate of interest, you get an amount. This is nothing but present value of perpetual cash flow. And if you are finding it difficult to accept this logic, just see, I am going to invest 100,000, 1 lakh at the rate of 10%. It means every year this will generate interest of 10,000. And I give instruction to my banker, never ever pay this 1 lakh back to anyone. Okay. Let this be a permanent fund. Never ever give it to anyone. So this 1 lakh will be there with the bank. Every year it will generate 10%. Every year it will give a cash flow. So what is the source of this 10,000? The source of this 10,000 is this 100,000, that is 1 lakh. So understand here, the present value of this cash flow, perpetual cash flow, is nothing but this 1 lakh. This is originated from this 1 lakh. So what I did here, 10,000 is a result of 1 lakh into 10%. So I am just shifting this 10% to the right hand side. That is 10,000 divided by 10% is equal to 1 lakh. So that's what I have written here. Perpetual cash flow divided by rate of interest. 10,000 divided by 10% is equal to 100,000, 1 lakh. So that is the present value of perpetual cash flow. So formula wise, it is very simple. Present value of perpetual cash flow. I'll put it again. Present value of perpetual cash flow is nothing but perpetual cash flow divided by rate of interest. Okay. There is nothing but perpetual cash flow divided by rate of interest.